Hi there, and today's the first day of spring, so happy first day of spring, everybody. This is Desiree, the founder of HomWork. HomWork is where you can live where you work where you live, anywhere in the world. And for those of you who are not familiar with HomWork, what we do is that we acquire luxury style homes and we build out the bedrooms to be live work suites. The women, professional business women can live there full time or part time if they're just visiting and traveling, or drop in if they're just there for a couple of days. We also have a membership organization. It's by membership rather, and you can attend the events. You promote your business through doing live events and conferences and meetings, as well as podcasts and videos. We also have host properties, whereas if you have a host property, either a vacation home or a guest room or guest house that you want to us include on our portfolio, then we can share that as well. Because all of our guests are members, and they've all been vetted to have background checks. And it's part of a community. That's what HomWork is. And our commitment to you is, as we're building this, most of you know us from An Empowered Woman that we've had for 12 years. And then prior to that, I had 29, 30 years of real estate experience. We are building this new business of HomWork for women, again, that want to be able to utilize that co-working, co-sharing, co-living space. But also the Tuesdays at 12 is to be able to show you and share with you all of our products, our programs and services and people that we're working with to be able to accomplish this goal. So I'm kind of taking you to the back end of what we're doing and how we're doing it. So today I have a special guest. Her name is Asumahu Mustapher. Did I pronounce that correctly, folks?
That is correct.
Great, fantastic. And she is also one of the senior communicators with the SBA, working for a PNC bank. Is that correct? Yes. And a lot of us are different phases of our business. And so you think of the SBA for people that are just starting a business. We're going to go through what that entails and what that looks like, but also for those who are have multi-million-dollar businesses, how they can utilize it as well. So good afternoon. Thank you. And thanks for joining us. How are you doing?
Thank you for having me. So once again, my name is Asumahu Mustapher. I do SBA lending for PNC Bank here in Maryland. I hope everyone is doing well. So today I wanted to touch on a couple of things that I really think is pertinent to small business owners. How to navigate your way through the lending process and how to really position your business for banks to be able to invest in your business and provide capital for your upcoming project. So one of the things that I wanted to talk about is the 5 C's of credit. So 5 C's of credit is it's a standard, it's a lending standard that all lenders look at. And I feel like every business owner should know what the 5 C's of credit is, because you want to make sure that you are prepared and your financials are clean and you're able to position your business in the best light for a banker to look at. So one of the first 5 C's of credit is capacity. One of the things that underwriters look at when you're looking at your financials is that, do you have the capacity to pay your loan back? That's either through personal funds or business cash flow. So those are the two things that banks look at. If you're in that early startup phase, then the bank really doesn't have any historical information to look at. So they'll be looking at your projections, right? They'll look at, what you're planning to make, and they will use that as a source of capacity for you to be able to pay your loan back. So that's in a nutshell what capacity means. The next thing is capital. Does your business have enough capital to put skin in the game? Because the banks love to have our borrowers have skin in the game, because in the event of your business, if your business hits a rough patch, or if your business is going to go, to the ground or whatever the case may be, they want to make sure that you've invested some skin of yours so that you won't let that happen, right? So that's one of the things that the bank likes to see as far as capital. And usually if a business owner puts capital in the business, there's less likelihood of the business to fail because, as I said, the business owner is invested in the business as well. The next C is collateral. Does your business have collateral in the form of inventory, accounts receivables, cash on hand? Those are the types of things that banks like to look at. In fact, the SBA recently made a change where they are now also requiring collateral, which was not the case in the past. So that's a big sign that the SBA is also making sure that they are also doing prudent lending, which means that the bank and the SBA is doing their due diligence to make sure that they're taking the right risk on the business. So yeah, collateral is very important. And also collateral can be in the form of your personal home as well, or investment property. Conditions. Conditions are the state of the economy that can certainly impact your business. If there's pending legislation that can impact your business, depending on the industry, those are the conditions that the bank will look at to see if that will impact your ability to pay the loan back. And you would definitely want to mitigate that and position your business so that when those things that happen, things that are out of your control, you are able to weather that storm. And then lastly, which is very important, and I stress this to all business owners, the fifth C is character, and it's very important. The bank doesn't know you. For most banks, the borrower is a number. So they really don't have any insight as to who you are on a personal level. They're looking at it strictly from a business perspective. And the way that banks attest your character is to your personal credit and your work ethic and experience. So with that being said, you want to make sure when you're approaching a bank, you highlight your experience in the form of a resume. In addition to that, your personal credit is up to par. There aren't any derogatory remarks on there. If there are derogatory remarks on there, you've done a good job of, taking care of that before you apply for the loan. So those are all things that will help position your character to the bank. Are we able to take questions? And I wanted to take a second and see if anyone had any questions or comments about anything that I said.
Yes, and I know we had talked earlier also some things that we wanted to cover as well. So I'll look for the questions and I'll see if anyone comes up or any comments, and I'll read them out. One of the things, let's go back up a little bit. So what does the SBA consider a small business?
That's a great question. So the SBA has two definitions of what they define as a small business. One is if the business has less than 500 employees. That, to the SBA, you're considered a small business. If you don't meet that definition, then also if you do $5 million in net income, which is your profitability after you've paid your taxes, if you have less than that, then you're also considered a small business under the SBA's eyes.
Okay, because we also refer to the fact that sometimes people have virtual assistants or independent contractors, so for us to make sure, again, any questions you have, I see some great comments. So please ask the questions. If you have independent contractors like we do, everyone's an independent contractor, then we would fall upon the income model as far as we're making less than 5 million, correct?
Right. But do you have 500 employees?
No, we don't.
You have less than that. So
right,
you would
less than that.
Small business that.
Okay, so it could be virtual assistants, but as long as it's less than that. Okay, another thing we talked about earlier is that some women may have a $10 million business, but they don't have that profitability because you're speaking profits, your net. So this is excluding when they have, again, a $10 million business, but their profitability is not there. And perhaps they need that extra loan to be able to get more equipment, to be able to expand their team and so forth. Is that correct?
Yeah, that is correct. Yes. So we've certainly, within business banking and commercial banking, we've certainly helped clients use SBA, and they have $30-40 million businesses and they're still considered a small business because of the fact that they do $5 million and less than $5 million in profit. So that's a testament to the fact that they are still considered a small business, even though they have, big revenues.
And then another thing is that, so when you talk about the credit, what are the credit scores requirements? Because I know a lot of people have gone through different, whether it's dissolutions or divorces or downturns, what's required?
So the banks, for example, each lender can set their own credit score metric that they look at. For example, here at PNC, we like to have a credit score of above 700. If it's less than 700, if there's a reason why the score is on the lower side, for example, as you noted, bankruptcy could be one, divorce or medical reasons, then as long as that hasn't occurred in the past 12 months, we can certainly take a look at it. But preferably, we would like to have the credit score above 700.
And then I know we talked about what's required to be able to get the loan. Like you said, a business plan and tell us what's required and how we can acquire that.
Sure. So it depends on what you're requesting. If you're a startup and you have no historical financials behind you, meaning that you haven't filed any tax returns, you haven't showed any income or any, reporting system or anything like that, then, you're a startup compared, in the eyes of the bank. So they're going to look to you to really tell us your vision and through your business plan. So your business plan is really going to outline what you're looking to achieve as far as your demographic, as far as the products you're going to be selling, the services, how you're going to market to your demographic, all of those things. So your business plan and projections, and we're going to rely heavily on the projections because we really don't have any historical data to base our capacity on, which is what I noted in the 5 C's of credit. So with that being said, the bank is going to certainly put a lot of weight on the business plan and your projections. And there are actually a lot of resources out there to help you with that. So if you don't know where to start, you have all of these great ideas and you have an idea of how you want to market your business, but you really don't know how to put all of that together in paper form. There is resources out there provided by the SBA. One is the SCORE. In every county, in every state, there is a local SCORE office where they have business consultants who are entrepreneurs themselves or retired employees who have dedicated themselves to helping small businesses. So they are there and they provide free services to local small business owners. They can help you with your business plan and help you craft your projections. In addition to that, there's also local resources called the Small Business District Office. We call them SBDCs. And what they also do is they provide services to help business owners craft their business plan and projections. And I definitely love working with them as well because most of the employees there are employees who have worked for banks, worked with lenders, have partnerships with lenders. So they know exactly what the banks are looking for in reference to a business plan. So those are 2 resources that I definitely would recommend you tap into if you really don't know how to approach a bank regarding a business plan.
And I think that's really important because some people actually look at a business plan could be $3,000 to $5,000 or more dollars, and that could be a stopping point right there. Yeah. But we have worked with the SCORE, and we have really worked with the SBDC, where they've actually come into our offices and actually trained or come to your place of business and train you specifically one-on-one. So that's a great resource to be able to utilize to get that business plan, not only for your loans, but just for yourself as well. Take advantage of those resources because they're complimentary, they're free resources.
Those are
to be able to utilize that. Pardon?
Tax dollars at work.
Exactly, it is. So there's something that everyone's entitled. Another thing that I thought about is that some people may think, okay, I'm already in business and it may not be applicable to me. But we were in a business for 12 years, and now we're starting a new segment of our business. Like HomWork technically is a new business. So many of you are branching up or branching out. Maybe you're in the corporate world right now, and then now you're going to be going on your own independently. This would be applicable to you. This will help you get the funds that you need to be, and the education and the resources that you need to be able to take it. Because SBA doesn't even start with just that. They have a lot of other programs, like emerging leaders, where you have to actually, I think, make $600,000 to be participated. It takes you from there. So they have many, many, many different levels of assistance for businesses, and a lot of events that I wasn't even aware of until recently. So it's great. Another question is that, does someone have to be, or the loan have to be in Maryland to be able to work with you and through you?
No, actually not. As long as the business is located in the PNC Bank footprint, I'm able to work with you through SBA. So if there's a PNC Bank near you, we can work together.
Another thing that was really interesting that you shared today is that the bank is the one that actually really qualifies you, and the SBA is more of like the insurance. That's like in real estate, you have the PI, loans. So tell us how that works, how that really functions.
Yes, that's a great question. So there is a big myth out there that SBA lends directly to businesses, and that is not correct. So the SBA does not lend directly to individuals or businesses. What they do is they provide insurance to lenders like PNC, and then smaller lenders, like your community banks and your non-bank lenders. So they provide insurance to the lenders. For example, PNC is a preferred lender, which means that they have the authority. SBA has given them the authority to actually make their own loans to small businesses. So, and they trust the bank's judgment because they've vetted them and made sure that they are, working according to what they said. Yes. So that being said, I definitely would recommend, if you're going to go for an SBA loan, you work with a preferred lender because everything is underwritten in-house and the process will be a lot streamlined if you do that. In a nutshell, the SBA does not lend directly to individuals and businesses. It's all done through the banks.
And I think also, too, that gives you a great opportunity with someone like yourself to be able to develop a relationship, because you can assist them and help them prepare their packages. Because you're not the final word. You're the person that says, hey, well, it looks weak here, but it's really strong there. Perhaps you can do this and do that. So when you do present that package to the lender, the actual lender, you are prepared, and it's more opportunities for you to get a yes as opposed to get declined.
Yes, that's perfectly said. That's really my role. My role is to be the customer's advocate. And I know what my bank's credit policy is. The borrower doesn't. So I want to make sure that when I'm reviewing the package, I'm doing an initial analysis to make sure that we've met all the metrics that the banks require so that when it does get to my underwriter, they're able to approve it. And a lot of the legwork that you do in the upfront is really going to help you in the end game because, as I said, if you do the legwork, you do the due diligence upfront by getting the business plan and projections together and having a robust business plan, by the time it gets to the underwriter, they read through it. They're like, this deal is a good deal. This customer is organized. Your financials are clean. It makes just for a great borrower's experience through the credit process. So I definitely would say that working with someone who understands your local market, or even if they're not local, just having that line of communication open and having that dialogue with your banker is going to be crucial to that process.
It's cute how you said that as far as the great experience, great lending experience. A great lending experience is a yes to the package for our loan. We have some other great comments. One question we have is like, how can business owners mitigate the risk for banks to invest in their business? So I guess it's basically able to get approved.
Correct. Yes. So depending on how much you're requesting, I definitely would say every bank has their threshold, right? There's certain loan amounts that once you go above that, some banks are just not willing to take that risk. So I can tell you from my experience, just in my market, anytime I'm working with a request that's above $1 million, there's a lot more eyes on that deal. There's a lot more due diligence that needs to be done on that deal. And, PNC does have, some challenges approving deals over $1 million because you're just not okay with that risk. So it depends on the lender that you're working with. So for the loan amount, I think definitely the loan amount can help you reduce your risk to the bank. So if you're asking for $100,000, that's a small request. That's pretty easy to do. But if you come to the bank and you're asking for $1 million and you haven't really, proved your concept yet, it's going to be very challenging for a bank to get behind. So I definitely would say the loan amount, looking at that. Also, how much you've invested in the business. If you've invested zero in the business, then the bank is not going to be comfortable with the fact that there isn't any equity from the borrower. As I said, skin in the game before. So that's one way to mitigate the risk to the bank. Another way, and the best way to mitigate the risk, is collateral. If you have collateral for the loan amount, let's say you're requesting for $100,000 and you're a startup and you don't have any historical data behind you, but let's say you have your home and you have some equity in there, that's collateral that the bank can tap into. That's one of the best ways to mitigate the risk. And lastly, if you don't have the capital yourself, maybe seeking out an investor who does have the capital that could bring value to the application will also mitigate the risk of the bank as well.
What's the maximum amount that you've known for them to be able? I know it varies from bank to bank, but to your knowledge, what's the maximum amount they could be able to borrow through the SBA program? Is there a ceiling?
Yes, there is a ceiling. So depending on the program that you're using, so for example, the 504 program, which is primarily used for commercial real estate and big equipment purchases, that you can go up to $15 million in financing. If you are using the 7A, which is usually the program that most startups use, then your ceiling is $5 million. That's the maximum you can borrow under that program.
Okay. Another question is that should small or new businesses invest in other entities and other investments such as real estate? Can we use these funds to invest in other things like real estate or into businesses?
Absolutely. So when it comes to, it depends on what you're looking to do. If you're looking to expand your business and you're looking to buy maybe another business, you can use SBA for that. It depends on where you are in your business. And if you're in that startup phase, I definitely would say start slow. If you've in that startup phase and let's say down the line that you want to purchase a piece of real estate, lease that property for a while. Let's say, down the line, this particular site is perfect for your business, it's perfect for marketing, it's perfect because of the location and, depending on the services that you're selling, I would recommend you lease that space for a couple of years and put in your contract or lease that you want to buy this building in a certain time frame. I've certainly come across that several times where borrowers have negotiated with their landlord to buy the property and they have first right of refusal, which means that if the landlord wants to sell, they have to sell to the tenant first. And that's the agreement that they have. So I definitely would say start off slow, build your capital, lease the space for a couple of years, and negotiate it in your contract. And then ultimately you're positioning yourself to get the financing for that particular building. And also you can protect yourself against the value, because if you negotiate in your contract, which I've seen this several times, and smart borrowers do this, they will put a price in there that, can't go above that. So for example, if the real estate is worth $1 million, then they will put in that contract, in 5 years, when I decide to buy the building, I'm still going to buy it for $1 million. Now, it depends on your landlord or whether they're willing to sign that. But I've seen very smart borrowers do that.
Well, that's a very good question, because that's exactly how we're doing some of the homes and HomWork. We're lease optioning them for 2 years as our threshold, and then we're being able to option them. Gives us an idea of, again, how that specific location is working as far as ability to our clients, but also the market gives us that opportunity to see if the market is going, because there's so flux in that. So that's a great question. Another question is, what things do you look for in an initial package analysis?
That's a great question as well. So when I look at a package, the first thing, depending on the request, if it's a company that's been around for a couple of years, the tax returns are always one of the first things that I look at to see what their top line revenue is and what their bottom line is, because that's what the bank is going to look at to decide whether this business has a capacity to pay the loan back. So if you're a historical business, you want to make sure that you're filing your tax returns. And we also want to have a conversation with your CPA, because I've seen many times where borrowers want to reduce their tax liability, and it does impact their ability to get a loan because they're therefore reducing their income or their profit. So I would definitely say, if you know that you are going for a loan, you want to make sure at least 2 years out or 3 years out that you're slowly building your income, because the banks are going to go back on a 3-year period if you have historical financials. If you're in that startup phase and there's no historical financials there yet, then the bank is going to rely heavily on your business plan. So I would look for a business plan and projections. And I also will look to see how realistic your projections are. I mean, if your industry if their profit margins are only 15%, and in the projections you say, well, my margins are going to be 15%. Well, how realistic is that going to be compared to your peers? So those are the things that we typically look at. We look to see how realistic your package is, how realistic it is that you're going to be able to execute on your business plan. So those are the things that we typically look at when we're looking at a financial package.
Well, thank you so much for those great questions. And I want to thank you again for your time. There's so many things that I know everyone has an individual business and questions they could ask. So one good thing is they'll have all your contact information in the description. So they'll be able to contact you directly, and you'll be happy to give them a consultation, correct?
Yep, I would love to do that.
Whether they're local or not. It's just really having an ally when you go through that process. Applying for the loans and things of that type are just really daunting and stressful as it is. So to have someone to really just present you the best way possible, or to tell you to wait, tell you get this, and this, so you can be presented for a yes. And that's extremely important. You're going to give the first 3 people that opt in. There's going to be a link that's going to be in our social media feeds and our descriptions that will give you a free complimentary mug, from PNC. So, if you need as many cups and mugs as we also possibly can get. So for those of you who are interested in knowing more, contact Assume directly for a complimentary consultation, or opt in for her mug, and then opt in so you can stay attuned to what's going on with us. We have quite a few fantastic events coming up and launches coming up for HomWork, and we'd love to be able to include you. And please subscribe anywhere, everywhere. Join us on our social media, subscribe on our YouTube, get ready for some exciting events. We have our first properties that we'll be showcasing very shortly, so just subscribe and become involved. So again, thank you. In closing, what words of wisdom would you like to share with our community today?
I definitely would say, don't be afraid. Don't be afraid to take that risk that you've always been thinking about. Don't be afraid I know it's easier said than done, but don't be afraid to leave the job that cushioning feel that you've had, and just take that leap and making the investment in your dream. So that's going to be my words of wisdom today.
Great. Well, thank you. And that's a wise, wise words. And I want to thank you for joining us. This is Desiree from HomWork. And remember, homework is where you can live where you work where you live, anywhere in the world. Until we meet again, stay empowered.
Thank you so much. Have a good day, guys.
You too. Thank you. Yeah.